Okay, it is January 18th, 2016, and welcome to Wake Up and Smell the Coffee call. We have a very, very special guest on the line this morning, Schortgen, and I want to cover just a little bit of introduction here properly. He's a historian in his primary field of study, an investor in the real world. Kenneth has a keen perspective on all facets of the financial world. He has owned his own business and corporation. He's been an investor in many different markets, such as securities, real estate, currency trading, international trust, and his desire is to provide you with the true understanding of markets and the economy, and to give you the information that will help you make your own decision in the times that we have, which are sometimes troubling and quite often very fascinating regarding all your economic decisions. Kenneth is not a certified financial advisor. His only goal is to give you the true information by which you can see things as they happen, and in many cases before they happen. I think that's important out here to get this out here. And Ken, I just saw the Big Short yesterday, and I was talking to you a little bit about that. But you got an article that you just put out there in the chat room, and you're talking about the meltdown already. And, of course, we've all been watching what's going on with the stock market. I would love just to have you come out and open up and talk about this.
Sure. And for those who have seen The Big Short, I'm not going to, go too much into it. But the most interesting thing that stood out to me was at the very end when it was doing the narration, speaking about what each of the proponents in the movie, what they're doing now. But the final narration, where it said, in 2015, the big banks started selling a new product that they termed bespoke tranche, bespoke tranche opportunity. Yeah, bespoke tranche opportunity, of which Bloomberg said that this is just another name for a CDO, collateralized debt obligation. What the CDO, as we saw in the movie, is that instead of everything being absolutely AAA, highest of value in these mortgage-backed securities, they took the lesser, the subprimes, they piled them all together, the ratings agencies were paid off, and they declared them as AAA, and those were the ones that collapsed. The CDOs are the kerosene in the fire, as the movie stated, that caused the national meltdown. It was the synthetic CDOs that later made it the global meltdown. But they're doing it again as of last year. Well, the important thing about this is that all of these things are destined to fail whenever there's a bubble. We recreated the housing bubble almost immediately after that with QE. That was one of the big purposes behind it, was to recreate the housing bubble. We've created a stock bubble, and as we've seen in the first 17 days of trading in 2016, we not only had the worst week ever in stock market history, but we also had absolute decline that we're into bear markets in the equities. Oil prices have fallen below $20, which is, or $30 to $29, which is the lowest since 2002. And what came out this morning, both from an interview on USA Watchdog with Nomi Prinz and Bill Holter, who he wasn't invited to do that interview. He asked Sean over at SGT Report if he could add the time to get this information out. And the information is pretty much tied to the fact that we are now in a global margin call, which already, when we're in a deflationary period where there's a lack of liquidity and no money out there, when you have a margin call, that means everybody has to sell anything of value they have just so they can cover that margin call. And that's why you're seeing stock markets, over the weekend, when Iran suddenly had the sanctions removed and they're starting to put more oil out there. Qatar's stock markets, one of the big OPEC nations, they pretty much collapsed. We had this morning, French President François Hollande has declared a state of economic emergency. We have, who else is going? Well, Canada. We don't even want to talk about Canada, because Canada is pretty much entering into a hyperinflationary state because they have to import so much, and since they have no revenues coming from the low oil prices, they are stuck. We had Venezuela. Nicolas Maduro has signed a decree on a state of economic emergency lasting 60 days, which you know is going to last a lot longer. These all happened in the last 3 or 4 days. The economic collapse and crisis is occurring right now. So
I just got to ask you, basically, and we always kind of want to know how much time we have, and it looks like it's starting to happen already. What does this mean as far as the average person that's got maybe a lot of stock still in their portfolio, and they've been kind of wondering, well, gee, I'm kind of waiting for gold to go up. When do I pull money out of stocks, and when do I purchase gold and solidify and back myself up? I want to know your expert opinion as far as when that would be. Now, even though I know you're not a financial advisor.
Well, if you wanted my honest opinion, we've been those of us in the alternative media and alternative finance have been saying get out since 2008. So if people are now all of a sudden, should I do it now? It's too late. If you can sell, because here's what happened, and if you remember from the movie The Big Short, at the very end, they had all of these credit default swaps, these bets against the mortgage-backed securities. And they were afraid because of the insolvency that was coming to Bear Stearns, to Lehman Brothers, they were afraid that there would be nobody to buy it because a market requires a buyer and a seller. Well, guess what? The stock markets have been proving that there's primarily sellers. The gold market has been proving that they don't have any gold, and you're paying massive premiums for it now. If people had decided on this course of action 2, 3, 4 years ago, then they would have been much better prepared. But for now, you're going to be stuck with getting whatever pennies on the dollar you can get, trying to catch a falling knife. And if there's a potential that the Federal Reserve, which I'll tell you straight off, has no more ammunition, by them raising interest rates. By the way, you know why? It's an interesting thing. You raise interest rates to stem off inflation. You don't raise interest rates when there is a deflation in the economy, and we are in absolute deflation. So either the Fed is absolutely stupid with hundreds of Ivy League economists who don't know anything what they're doing, or there's another purpose behind the raising of interest rates, which took place in December. And my venture, and I'm in following with my own analysis along with Rob Kirby, is that there was an estimated $1 trillion that were of treasuries held by foreigners that were sent back in 2015. $1 trillion. As a matter of fact, there was $108 billion sent by China in December alone. There's been $47 billion sent back from foreign countries so far this year. And to hemorrhage that, because what market is there to buy all these treasuries? There isn't. So the Fed and the U.S. Treasury itself has been buying them before they hit the market to try to protect the yield rates on the U.S. Treasuries, the 10-year, the 30-year, et cetera, et cetera. When you can't get them before they hit the market, that's when you have Greece. That's when you have Portugal. That's when you have Spain, where the bonds are so expensive and so risky that they have to pay something like 10 to 20% interest just to get people to buy them. And if the world knows that everybody is rushing to the door dumping dollars, then that's going to drive, you're going to have no market and nobody's going to buy it. So I think what the interest rate raise and the talk about raising interest rates 4 or 5 times this year was to throw a carrot to the rest of the world saying, okay, I know you're not getting any interest at zero interest rate policy that we've been doing. So we're going to raise interest rates so you at least get a little bit for holding these treasury bills and these T-bills. They're trying to stem the flow of everybody dumping dollars. Because the reason that everybody's dumping dollars is because there is a global recession, if not depression, in some areas of the world, and they're dumping their dollar reserves to try to protect their own currencies, i.e. China, or to get liquidity so that they can keep their people from having civil unrest.
I've just got to say, it looks like the stock market is actually down today, but it took a big dive on Friday. Ever since January 1st, it's just been dropping. And I keep on hearing Canada come up, and I know that you're right, that you just, all you have to do is look at the currency I guess it's called the loon or something like that. I think it's called the loon, and you compare it to the U.S. dollar, and it's hardship up there in Canada right now. And
Yeah.
I mean, how bad can this get? Because a lot of people, and I really, I'm after seeing The Big Short, I'm seeing this again, that they don't believe it until it's too late. Is that correct?
Well, that's sort of why you need movies, because you know what? They won't believe analysts, but they'll believe a movie. They'll believe Hollywood. So it's apropos this movie came out at the time it did. Canada, of course, has relied. They are like Australia. They're like Russia. They're like the Middle East. Almost their entire economy is based on selling of natural resources and energy to the rest of the world that actually produces product. Well, since the economy is in a massive slowdown, nobody's buying as much products, so you have Walmart and Macy's immediately after the Christmas holiday shopping season, not only laying off thousands of people, but they're shuttering stores. That tells you right there that the consumers aren't buying anything, and the consumers aren't buying anything, then the producers. And you want to talk about something that is beyond shocking. There's a website, I don't know it off the top of my head, but you can check the maritime status of every commercial shipping vessel where they are at in the world to track it. I've got a picture over at the Daily Economist on one of my articles. It shows absolutely zero commercial ships traveling either in the Atlantic or in the Pacific. No resources going to China and no products going to the U.S. or to Europe. Nothing. The Baltic Dry Index used to be, in its relative value, was in the 10,000s. It's now down to 310. The Baltic Dry Index regulates the cost of shipping, and when the cost goes down, that means that they're desperate for nations and producers to actually send something via cargo ship, so the prices decline way down. If there's a lot of shipping, then the prices go up. The supply and demand ratio of that. So nobody's shipping anything, nobody's producing anything. Oil prices, because nobody has to buy any energy, and there's such a glut of it, are down below $30 a barrel, and the nations that rely almost solely upon oil and selling of energy for their revenues and their commerce, Canada. It's not necessarily the Keystone Pipeline debacle is a problem, but the White Sands Shale, that is one of their primary sources these days, they had to lay off 100,000 workers. By the way, Canada also, thanks to the former central bank head, Mark Carney, who now is over in doing the Bank of England, he started a housing bubble. Now, Canada used to be one of the most fiscally responsible governments, countries, and economies in the world. And then when Mark Carney decided to infuse this housing bubble, it created so much debt that the the province, I forget them, but Alberta has a $600 billion deficit, and their premier has sent out a letter to every citizen in Alberta asking them to donate money to help pay off the debt. This is above and beyond being one of the most highly taxed in the Western world. One of the over the weekend food prices. Some of the Canadians were sending tweets out with pictures at the grocery stores. They had 31 Canadian dollars for a bottle of Tide laundry detergent, $8 for a head of cauliflower, $15 for a box of Frosted Flakes. This is price hyperinflation, because Canada has to import everything, and if they're not getting any revenues from their sales of oil, then they don't have any money to import things. There's shortages, and it's causing prices to skyrocket. So, it's amazing. Mexico during the Great Mexican peso crisis of 1994, I believe it was, the peso had escalated from 3.1 to the dollar to 7.2, and that was a big thing. It was a 50% jump to 7.2 pesos to the dollar. I have a friend who lives in Acapulco. She said that right now it is 18.5 pesos to the dollar. So
That's
we're
crazy.
having massive price, starting to see high inflation in Mexico. These are the two countries that are attached to the United States. These are supposed to be our best allies, and Canada is our biggest importer of our goods. So if they can't afford to buy it, what's going to happen to our producers? So this is what the margin call is all about. Is all of a sudden liquidity is completely shot. Production is coming to a standstill. Nobody's actually producing anything, so the oil prices are going down, and eventually it's going to reach a point of completely seizing up, and that's what the credit crisis of 2008 was.
And I just got to ask you, the manipulation and the government stepping in and some of the manipulation of the stock market and what's going to happen, and we might as well talk about this. You know it pretty well inside and out. You write the article, the daily blog article, the Daily Economist. I know you write for two others too, but I want your opinion on that too, as far as what we're going to expect in say the next couple months.
Well, we can't really judge what they're going to do with the stock market because one of the interesting things came out is it's either San Francisco or the Dallas Fed president. He's actually left office last year. He did an interview last week and said that, yeah, we propped up the markets. We front ran every market. And they use that with the ESF, the Exchange Stabilization Fund. Ironic when it comes to gold, the Exchange Stabilization Fund was created in 1933 or 34, and it was based on after the FDR confiscated all the gold and then repriced it to $35 an ounce. The difference between the old price of $20.42 and $35, that difference, they took that money and they put it and created this thing called the Exchange Stabilization Fund, which is not answerable to the government. It's like the Federal Reserve. It's a private, the government runs it, but it's a private institution, and it is used to control and manipulate the markets as the government sees fit. So when they want to create a bubble, or they want people to do stocks, or if they want to stop selling from occurring too much, all they have to do is take money from that fund, which is now in the tens of trillions of dollars. So the common investor can't even compete with this. So pretty much everything in the stock market is dictated and determined as the government sees fit. And if that's the case, and the government is allowing the stocks to decline, then one has to really ask the question, is this a planned collapse? Because one of the things about the stock market that most people don't understand is it actually falls much faster than it climbs. And there's more money to be made in the collapse of the stock market than there is in the growth of the stock market. So somebody's making money now, just as they made money from the time going up after QE was introduced. So you had the Fed introducing QE to build up the stock market, and now you have the government allowing it to falter downward. So somebody's raking in tons of bucks. And it's for a regular investor or somebody who has a mutual fund or somebody that if you had a mutual fund or a 401k or decided to get back in the stock market for long term after the 2009-2010 stock market collapse from 14,100 at its peak in 2007 to 6,600 at its trough in 2010. 40% of all retirees lost all their money, period, when the stock market collapsed. If you decided you want to stay long term and you think that that's not going to happen again, well, you're going to pay the price if you haven't gotten out by now.
And I'm just going to ask you to come out there and talk about why gold and why now, and why Karatbars, and just have you kind of wrap up this great interview with, the solution that we're out there with Karatbars, the mission of getting people to, back up their family with an economic crisis like on the horizon, and basically how gold can do this.
Yeah, as currencies decline and devalue, that's when gold naturally goes up. See, we're sort of I don't want to say arrogant into this, but we only see things from a United States lens point of view. But gold right now is pretty much uh, has barely lost its value against the euro. It's actually gained a lot of value against the yen, and it's gained a lot of value against the Chinese yuan. The reason is because only the U.S., the London Fix, and the COMEX manipulate the gold prices through paper. All of the other countries, gold is proving its value against the currency. And that's the one thing people have to remember about gold. Gold is not an investment. Gold is not a commodity, because gold actually doesn't do anything for industry. Gold is a checks and balance weight against currencies. And we are going through right now a currency collapse. So the only thing that you can really move your money into outside of real estate and farmland and those have their own pros and cons, is gold. And the world is rushing headlong into a return to the gold standard. This experiment of 40 plus years of purely fiat currency backed by debt is coming to an end. And the world's going to demand, and this is why you see the civil unrest. This is why somebody like Donald Trump and Bernie Sanders can override the establishment, and the people are demanding change. This is why in France you're seeing the rise of Marine Le Pen. This is why in Spain you're seeing the Catalonia wanting to secede from the rest of Spain. This is why you saw Scotland last year wanting to secede from the British Empire. The world is changing, and they want to get back to sound money. They want to get back to freedom and independence, nationalization. And the only way that's going to happen is if you have a core foundation, an economic core foundation and a financial core foundation that's going to be able to allow all of this rise of toxic debt to wash away, and then be prepared to move into a new transition of prosperity. And that's going to be with the gold standard. And something like Carrot Bars, you can go to your local coin dealer, and hopefully maybe they have some gold and silver. They really don't have a lot right now. If you're going to buy it from big time, you've got to get from China. Well, good luck getting as a foreigner, getting an account in the Shanghai Gold Exchange, especially for the value there. Then you're going to pay 30 to 40 to 50% premiums, because that's the true value of gold outside the United States, is multiply the current spot price by about 50%, and that's what it really is. So something like Carrot Bars, where you have the ability, e-commerce, to buy affordable gold, to keep it offshore, so you don't worry about confiscations, and you don't worry about currency devaluations, capital controls, and having to, if you have to leave the country, having to worry about moving it with you through the customs. That is why Carrot Bars is the absolute gold standard when it comes to purchasing gold, protecting your wealth, and ensuring its security.
I want to thank you for an awesome interview as always, and for